This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hi everyone, I know we're all hurting right now. Crypto has taken a beating, and Goldman Sachs says flatlining is the best case for stock-heavy portfolios. Flatlining? Zero returns? Sheesh. In situations like these, we can take a cue from the world's best investors, because a groundbreaking Ernst & Young study last year revealed that 8 in 10 ultra-high net worth individuals invest in alternatives. However, Bank of America's CIO recommends investing in one specific high-performing alternative to rescue your cash. He's talking about fine art. 2/3 of millionaires already hedge against inflation with art, according to UBS, because the last time inflation was this high, art appreciated by an unprecedented 33.2% annually. Now, obviously, most folks don't exactly have tens of millions lying around to start buying Banksys and Basquiat's, but that's where Masterworks comes in. They're helping people keep their cash intact by offering fractional investments in the top 1% of the art world. And with a recession on the horizon, they've seen sign-ups increase by 320%. That, combined with the fact that they speak to every investor to make sure art is right for them. That means there's a wait list, but I'm hooking you guys up with priority access to skip the line, and it's as easy as going to masterworks.com and using promo code CryptoConversation. That's masterworks.com, promo code CryptoConversation, and you can see important Regulation A disclosures at masterworks.com/CD. Again, that's masterworks.com and use the promo code CryptoConversation to skip the line. And now, folks, it is on with the show. My guest today is Alan Vey. Alan is the co-founder and CEO of the Layer 2 blockchain project Aventus Network, which is user-friendly, interoperable blockchain. I believe it was first on Ethereum and I think now on Polkadot, but look, we'll hear all about that today. Welcome back to the show, Alan.
Hey, Andy. Thanks for having me again.
So I think last time we spoke, it might have been near the beginning of this year, and I was just looking back through my notes, Alan, and I can see, we were looking forward to the merge, which was seemed quite close at the time. It took a little bit longer to play out, of course, and you were talking about potentially, getting involved with Polkadot. So it'd be good to get an update from you, Alan. But I guess before we do that, for anyone that hasn't heard your first appearance, let's do what we always do, Alan. You've got a fascinating background. We did speak about it a bit, but let's do it again. Please introduce yourself.
Okay, for sure, yes. So I am Alan Vey, the founder of Aventus. I started my journey when I did my undergrad in computer science. So I studied in London at Imperial College. That was in 2012. I started my undergrad. Then I went to work in a hedge fund for a while, Brevin Howard, looking at kind of machine learning strategies of predicting various financial assets, right? Decided that world was probably not the one for me. Ended up going back to do my master's in artificial intelligence, again at Imperial, and that was in 2015. And during that time is where I really heavily got into the sort of blockchain space. I went to my professor and I was like, I'm going to predict the price of Bitcoin. It's like, Alan, that's old news, man. Come on, look at the future. Ethereum's just launched. Tell me what these smart contracts are all about. So in digging into that, I obviously saw the amazing capabilities blockchain had beyond a sort of medium of exchange. And that's what got everything going. So my professor was the guy who set up the crypto center for the university, worked with him on my thesis. 2016, 17, I then sort of turned my thesis into a business. We were originally going after event ticketing, looking at how blockchain can solve that in the music industry. Did fundraising over 2016, 17, ended up with about $50 million, and we got building. So that was the journey. But yeah, it ultimately morphed into where we are now.
Yeah, fantastic. And so, well, let's start to learn a bit about Aventus then. So, I listened to our first podcast, a little bit of it, Alan, and we were discussing. You did an ICO with some of the Techemy crew. I think you raised over $20 million or something like that in 2017. Successful ICO nonetheless. So what was the big idea then for Aventus?
Yeah, so we were really looking at my master's thesis had been on film rights distribution.
Yeah.
And when we were analyzing sort of media in general, because digital assets lended themselves well to blockchain, right? I saw that music was probably 10 years ahead of film in terms of its innovation. So we thought that's a sector that will more easily adopt new technology. And then when you look at music, there's really two major camps to look at, right? There's recorded music, which is basically streaming, and there's significant sort of declining revenues in that sector. And then there's live music, which is shows and tours and stuff. And at that time, that market was growing significantly. So we thought, okay, let's get into a growth market in a sort of hotter sector. Let's understand what the problems are. And we came across the issues of scalping or touting, which is essentially where secondary market activity, the ticketing market will artificially price tickets below sort of market equilibrium because they want to sell out quickly. They want the venue to be full, whatever, a variety of reasons, right? And then you'll have these bots that automatically buy up that inventory in the primary market and shift it on a secondary market for much higher prices and essentially just arbitrage the market. And the artists and various parties that are involved don't get a piece of that. So we came up with one of the initial sort of NFT ticketing solutions, looking at how you can make sure everybody gets fairly compensated for this activity, essentially. So that's where it all started. We rolled that out. We worked with Live Nation, which is one of the biggest in the world, various smaller players. But as COVID hit, you can imagine this wasn't a high growth market. And we were fortunate in that with the sort of token sale we conducted, Ethereum, Ether, the token we raised in was $300 at the time, but initially significantly sort of increased in market cap over that time. So our treasury had expanded, meaning we could look a little further afield. Ticketing wasn't a high growth sector. So we looked where else can we apply this technology and how do we generalize the sort of stack that we have. And that's where Aventus as the layer 2 was born, and the various other sectors across loyalty, video games, NFTs and whatnot kind of expanded out of that.
Fantastic. So how would you describe Aventus then today, particularly in the context of, I suppose, Ethereum post-merge and the new engagement with the Polkadot ecosystem?
Yeah, so today Aventus is really focused on enterprise level adoption of public blockchain. That is really where we're finding our sweet spot now. So we were a layer 2 on Ethereum, which means essentially deriving our security from Ethereum. Having become a Polkadot parachain, that we've just won that bid, means that we're now deriving our security from Polkadot rather than Ethereum. But we've maintained our sort of decentralized bridge into Ethereum. So what that means is we've got this bidirectional flow of assets between Aventus and Ethereum, but fundamental security comes from Polkadot, and we can now talk to all the other Polkadot blockchains as well, which means we can offer our clients that full usage and ecosystem that exists within Polkadot. So we're essentially connected. Our thesis is the internet is the blockchain is rolling out similar to the internet, the way the internet did, right? Started with intranets, government networks, military networks, whatever. And then somebody connected all of that together. There were various innovations that led to that being connected together into the internet. And that's where we see blockchain today. We want to break out of a notion where it matters that some asset is on Ethereum or on whatever blockchain. Really, from the user's perspective, you want to just easily, in a user-friendly way, be able to access all of them. And that's what we like about the Polkadot vision and how our infrastructure is set up now. We have a connection into 50 different blockchains currently, and that'll only increase.
So the big idea there, of course, being that assets become interoperable between blockchains. And I suppose what you're talking about, Alan, is this idea, people use the term the Internet of blockchains, right?
Yeah, exactly. That's the kind of vision that we see. Almost, we look at it as the third generation of blockchain, right? The first generation was Bitcoin and all of the kind of other blockchains that spawned from that, really looking at medium of exchange. The second generation was smart contracts, where you created general purpose functionality that could be executed on blockchains, and that gave rise to a bunch of new interesting use cases. And now the third generation is really looking at creating this internet of blockchains and making sure that's sort of this efficient, interoperable vision of assets.
Fantastic. And I'd love it, Alan, if you could just briefly explain what a Polkadot parachain is. And is that is that quite competitive to win a parachain?
Yeah, so the process for a parachain is essentially you can do a private or a public bid. We went down the public bid route. You go to the Polkadot community, the people who hold DOT, and you make a case for why you'll be valuable to their ecosystem. Now, there are only 100 slots for parachains, so there's limited availability. We went for slot number 26 and won it. We had 200,000 DOT that was staked on our behalf. Whoever has the most staked at the end of the period wins the slot. So people have had anything from the first who went, it cost $1 billion for Moonbeam in terms of the staking, to ours, which was more like $1.5 million. So anything in between that, then that DOT gets held in the custody of Polkadot to essentially say, okay, we have proof that you have earned the slot. And then people get rewarded from native tokens for contributing value to the network. So yeah, it took a while to kind of make sure that we had community interest, that we had the right people involved to kind of back this. And now what that really means is, I like to make the analogy of, if you look at the internet and you're kind of buying your domain, when you buy a domain on the internet, like whatever, google.com, right? You lease that for a certain amount of time, typically from the .com DNS service. This is a similar thing for Polkadot. Essentially, we've bought our domain in the internet of blockchains. That's what getting a parachain slot is.
And why did you decide to go the Polkadot route in the first place?
Yeah, so really in line with this internet of blockchain vision, right? Gavin Wood obviously founded or co-founded Ethereum and was the CTO, and then went on to found Polkadot as a next step, seeing where the future was kind of evolving to. Now, it's still very important to be compatible with Ethereum. It's taken a bit longer for Ethereum to roll out, and it'll still be a while before Ethereum 2.0 is properly active, when we'll see if that can really bring about the sort of internet of blockchains thing with the various kind of side shard chains and whatnot. But Polkadot was already there today, and it was quick and easy to plug into that infrastructure. So different fundamental designs, but I think important to be active across both, which is why we've maintained the sort of plug into each of them to make sure that you can really get that internet of blockchain vision. And that's why we went the Polkadot route, because it was available today to kind of do that architecture.
It makes sense, Alan. And that's because Polkadot and a lot of these other new smart contract platforms, they of course have the advantage of being able to, stand on top of the shoulders of giants, if you like, or essentially look at what Ethereum did right and perhaps did wrong, and they don't necessarily have all the baggage that Ethereum has. And you talked about how, Alan, it's still going to be a process for Ethereum to move into its final form as Ethereum 2.0. But in the meantime, while that is the case, the merge went through last week, was it? Very successfully, I think. And I know you would have been watching this with a keen interest. What were your takeaways from the merge?
Yeah, I mean, it was great to see a project of such complexity be brought together so elegantly in a decentralized context, right? We've got the Ethereum ecosystem is a bunch of open source developers spread across the world, coordinating. It's a production network with hundreds of billions of value, right? Like it's a really amazing feat. I mean, everybody knows how difficult it is to take software that is in a live environment and migrate it. When any big business upgrades their software, typically they've got some downtime, right? There's like, okay, for an hour now we've got downtime as we switch the system over, and they talk to all their clients. Not only did they do this without any downtime, really, we're like completely in a live environment, they did it with a team that wasn't all based in the same place, and with a network that has such an incredible amount of value. So I think a really big engineering success to show how valuable these models are and can be, and that the future of development and sort of rewarding or incentivizing development through tokens, there's a really, really viable use case for that. I think it was also interesting to see how the mining power for proof of work kind of subsequently distributed itself. I'm not sure many people would have thought that Ethereum Classic would have seen the increase in hash rate, or quite the significant increase in hash rate. I think it's sort of 3 times. I think Ravencoin and a couple of other blockchains also saw significant hash power increases. So it was interesting to see that. I mean, one important thing I think to note there, something I spoke on earlier this week, is yes, there's a 99.5% efficiency gain in terms of energy in Ethereum itself, and that's become the dominant Ethereum chain, and in the long term, others will struggle to compete with it. But in the short term, we're not really talking about all of those miners having just switched their rigs off. And if you look across the whole blockchain market, at least 50% of those miners went elsewhere, right? So there's still a way to go to actually realize that full energy gain for blockchain as a whole. But for Ethereum itself and its market position, it's really, really positive to see. I think for the crypto industry as a whole, with the second biggest, most blockchain with the biggest utility having done this so successfully.
Yes, completely agree, Alan. Let's bring it back to Aventus then. You did talk earlier, you mentioned some of the use cases such as games, NFTs, event tickets, supply chain provenance, things like that. So I know these are all fairly typical blockchain use cases. If you describe Aventus as an enterprise-grade blockchain, presumably you're targeting enterprise business use cases, Alan?
Yes, so far it's been more kind of SMEs, sort of small, medium-sized businesses where we've got the key traction. The goal that we were looking at was build this tech. We've spent about $40 million on the core tech now, right? Really making sure that it's robust, going through this R&D phase. It takes a lot to get one of these networks launched in production with all the discipline, disaster recovery, all the boring software engineering stuff that makes sure that you hopefully don't end up as one of those people on the list that have led to the sort of $1.5 billion worth of hacks that have occurred this year. But then we built these different things, and it's very important, I think. You've got this blockchain, which is this general purpose technology, but you need to show clients specific use cases for how they can leverage it. The market is still too early days to just say, here's this great blockchain infrastructure, come enterprise architects, build your systems on top of this. So we'll get there once your average sort of software engineer fully understands what blockchain is capable of in their kind of tool set, but we're not there today. So we needed to build these client-specific applications and sort of prove product market fit. That's the bit of where we are now. So we have different applications, like you mentioned, all of those, and loyalty as well, where we've now got the initial clients using it, we prove it works, it's getting to proper scale. Now it's looking at, okay, how do we take that to the next level and show enterprises how they can leverage these things? And what is the easy way into the enterprise? Is it via the IT department and getting it sort of driven that side of the business? And our thesis is it's actually better to do it via the business side, make sure that we can show the actual commercial value to the business on why the solution helps, and go from there. Because if you look at the conversion rates between proof of concept and multi-year deals with enterprises in blockchain so far, they're very low. And it's typically because people have gone into the innovation department, haven't necessarily done the right use case. Sometimes people have said it's sort of a solution looking for a problem. So that's why it's really important to go in problem first. And that's where we are now. So yeah, really making sure that we can demonstrate that and hopefully onboard our first few and announce our first few big enterprise names.
Fantastic. Well, I was looking through your blog, I think on your website, maybe it's the news section, Alan, but so I saw there was a release came out in July, so it's a few months ago, but you were talking about Aventus was partnering with a national airline to bring increased efficiency and reduced costs to cargo management. So I imagine, is this like a supply chain thing, but it's for airlines, and what is this? This is for cargo management, right? So what? Talk us through this. This is it's a good like case study, right?
Yeah, exactly. So this is being conducted at Heathrow Airport with this particular national airline. What we're looking at is ULD management. So ULD is uniform loading device. It's essentially the pod in which people put all the cargo, right? So bags go in there, or mail goes in there, or whatever else that you carry around on planes as cargo. So at any point in time, 5% of these ULDs are lost. People don't know where they are. They struggle to find them. It causes delays. It causes loss of freight sometimes, the different penalties along the supply chain on how this works. So the reason this problem exists is kind of twofold. One is there's still a lot of manual processes. There's sort of paper data entry in terms of when this thing comes off the plane, moves around the airport until it gets onto the next plane. So there's human error. There is also there's so many different systems that are used, especially when you consider what's called interlining. So if you think of a piece of freight being taken from Dubai to London by Emirates, and then from London to New York by British Airways. So two different carriers carrying, really you're taking the thing from Dubai to New York, but you're interlining it sort of via different, obviously different airports, different airlines. So they all use different systems, and making sure that the data reconciles across the different systems, given most of these are from the 80s, is a problem. So what we see here is the supply chain inflation that we've obviously observed recently. Airlines have had a rough time during COVID, like really struggling in terms of profit margins and whatnot, lots of debt. Anything that can help them save money or increase operational efficiency, make sure the flights are more on time, make sure they're not having to spend extra looking for these, is a great benefit to the airline. So we come in and say, we will take the cost of the sort of project itself. We will prove to you what the efficiency gain is from the solution, and then you agree into a multi-year deal on that basis. So that's what we're doing, figuring out essentially that backbone of interoperability between the various systems that exist today, creating sort of a uniform way of seeing where these ULDs are, and creating incentive mechanisms for the data entry from the staff, almost sort of blockchain reputation systems, right? You earn tokens based on how good you do this whole thing, and then there's a reward for the tokens, or the tokens ultimately convert into the frequent flyer programs of the airline. So there's a real tangible benefit for the people who've done this.
Fantastic. Okay, well, I mean, that makes sense. It's a perfect enterprise blockchain use case, right? It's good for the airline. It's good for Heathrow Airport. What about, I suppose, how are you thinking, Alan, about more like Web3, metaverse, NFTs, gaming? The kind of the more the fun stuff for just individuals who are a little bit technologically savvy, perhaps, and they want to have some fun on their digital downtime. So they're engaging with NFTs. They're playing video games. They're exploring the early implications of what the metaverse may or may not be. These are NFTs, video games, all viable blockchain use cases that you'll be thinking of. How are you approaching kind of Web3 NFT stuff?
Yeah. So let me start on the video game side of that, and then we'll get into the NFTs. So we've built a sort of play-to-earn model, token that kind of allows people to align and sort of, create the right incentives within their video games. So we did a deal with a company, Fruit Lab. They've got about 600,000 users, and that is now adopted this token model. And what they offer is, social media content around AAA games. So the top games, Fortnite and whatever else. I don't know gaming that well, but some of the big ones. And so you can create your social media content, and similar to like Steam it or some of the other sort of blockchain platforms, the content that gets the most likes, shares, all of that, right? Earns, the creator themselves earn off of that basis. Then you're also able to play head-to-head. So you can compete in any of these games, and they now have integrations with many of the top AAAs, including Fortnite, where you can compete on whatever basis. You can put up your tokens, winner takes all kind of things in various different game modes there. So you can buy different NFTs that are boosters to your earning rates. You can do this whole gamified mechanism around creating template play-to-earn models around video games. So that's quite an interesting one. And I think that's almost to a degree what we're looking at with that market is creating a really efficient funnel into esports, right? Because if you're a really good gamer today, you can make great money in esports competitions. But what about the journey to that? It's only once you reach a certain level you can start making money. This kind of a system allows you to, even on the micro level, even on the game by game level, to generate a return depending on who you're playing against. So it really creates a funnel all the way up from the smallest to the largest in the space on being able to earn. So that's one interesting use case we've been supporting. I think we're doing significant transaction volumes, so 500,000 a month from them at the moment. Then on the NFT front, here we've got a bunch of stuff happening. So one interesting one to mention is in sports. So we're across sports, music, film, and a bunch of creative sectors, as well as other NFT use cases like data and medical records. But one example here is the client Parity. They've just done a deal with the WNBA looking at rolling out NFTs for them. Parity's mission is really kind of closing in the gender gap between male and female athletes through NFT strategies. So they've done a lot of really interesting stuff. And it starts, I mean, the industry as a whole, right? It started as, let's create some pictures and give people rights to pictures. Then the world started understanding, actually, I need to understand what the IP right that I'm purchasing here is. Do I have the right to display this elsewhere? What am I actually buying? Then we saw that the commodity of it wasn't sufficient. And even to a degree, the utility doesn't matter unless you have proper community. And that, I think this most recent crash has really showed us, right? When we saw majority of the crypto market go down 75%, but Bored Ape Yacht Club maybe hold 3 to 5% drop on the majority of the time. That really showed that if you can build great community, if you can get engagement, and it's not necessarily the best artworks, it's interesting, it's computer generated, and they've created a notion of scarcity. But what they've really nailed is community and the ability to engage that community, bring brand partnerships. And I think that's really shown a template for the future of the NFT industry today on how you can create a sustainable strategy. Now, the future is obviously a metaverse, but I think everybody, you must have seen when Zuckerberg released the Facebook metaverse and what everyone was saying around that, right? It was rather amusing that was the current state of development, should we say?
Yes, it was.
So metaverse a couple years away. Yeah.
Yes, indeed. All right. Well, thank you, Alan. Let's start to wrap up then. And just before we do that, you did allude to the current state of the market. Certainly, you had it feels like crash after crash recently, both in NFTs and of course in crypto as well. Maybe we're sort of somewhere near the bottom. Or who knows, we could just kind of drag this out and go sideways and down for another year or three. No one knows, of course. And look, I'm not saying that you do either, Alan, but yeah, just any observations on how you think about the market and what it's like trying to kind of, build through what is definitely a bear market. And, those kind of, those conversations they're just harder in the bear market, aren't they?
Yeah, for sure. So I'd say in general, business development becomes more challenging. I mean, when we're looking at enterprise strategies, the sales cycles are so long with these guys. We're talking on average 9 months, right? That the market forces aren't too relevant. Obviously, people are asking, I think almost universally people have accepted crypto as a real thing and it's here to stay, even in the wider world outside of sort of us that do it day to day, right? So that's been a really positive shift I've seen in the last year. And even through this bear market, that sentiment remains constant. But of course, there are a lot of sort of questions to address. That's why I always bring up that Bored Ape example where it's not all negative. Yes, it creates challenges. Yes, people lose a lot of money. It's certainly there are a bunch of issues with the bear market. But there is a silver lining in that. It means that projects that have held themselves up on pure hype without fundamentals can't be shouting that loud anymore, right? Everybody's struggling. So if you have some fundamentals, you have a real business to fall back on. If you don't, then you really have nothing, and it's a free fall to the bottom. So what it does allow is people who've put fundamentals first, people who have real value add, to kind of cut through the noise. And it's been a very noisy space and hard to be heard. So in that respect, I think it's positive for the industry as well. Others looking in have an easier time finding businesses that have some real stuff going on. And also it's starting to lead to a degree of consolidation, I would say. You're seeing various projects either not make it and then be picked up by other projects or different collaborations. It forces people to really focus on the fundamentals of business, which is, sustaining your burn, not just through cap gains, but actual revenue generation, through user growth, through kind of those sort of key metrics that exist within a business, which to me, I think is good for the long term of our industry. It creates the sort of health that real financial people coming into the industry are looking for.
Very well said, Alan. Very well said indeed. Let's finish this off then. Look, just invite you to, again, make the case for why people should engage with Aventus and look at what you guys are building. And where should people go if they want to keep abreast with what you guys are doing and what you guys are building?
Yeah, so depending on people, I don't know, Twitter or whatever is the best space, but all of the social links on the website. So Aventus, Aventus.io is the website. Obviously, Telegram is the place where most of the news breaks first and where you can kind of get questions answered quickly. So that's at Aventus Network. And then across all of the other usual socials, depending on what people's preference is. Aventus in general, we're starting to see real traction in existing businesses, bringing them onto the blockchain. And that's what, to me, is really exciting, seeing how we can sort of convert the Web 2 world into Web 3, not just build a bunch of new Web 3 applications, that's already being done quite well, but really helping that other side of the funnel too. So yeah, that's a reason to stay tuned to what Aventus is doing.
I like it a lot. All right. Always a pleasure, Alan. I enjoyed talking to you today. Thank you very much, and bye for now.
Thanks, Andy. Good chatting to you, mate.